Hi, everyone. My name is Marjorie McPike. I am the CPA lady. Welcome to the CPA Lady podcast. The podcast is about accounting, taxes, tax planning, tax strategy, and generational wealth, anything to help you take your finances to the next level. I am happy to have with me today Atiya Brown, the savvy accountant. Atiya, would you tell us a little bit more about yourself, please?
Hey, it's Atiya.
Atiya, I'm sorry.
No, you're fine. My name is Atiya Brown. I am the owner of the Savvy Accountant firm. So we are a full service CPA firm. We specialize in tax strategy, tax resolution, tax planning, and we also do the compliance piece, which is the tax prep.
Mm-hmm.
And yeah, so happy to be here.
Awesome. And where are you located?
So we're physically located in the Dallas, Texas area, but we service clients all across the US and in Canada as well, because I am licensed in the US and in Canada.
And in Canada. Okay. So how did you get your start in accounting?
I actually have always had a thing with numbers and math. And so I went to school for actuarial math. And after my first semester, I realized that I'm like an extrovert. And so I probably wouldn't really fit in with the actuarial scene. And so I took my first accounting course and I did pretty good. And so that's what started, like, I never thought that I would be an accountant, or I wasn't even going that route until I actually got into college.
Okay, awesome. And you've been in public accounting for how long?
So I have been working in public accounting for about 16 years now. So we're in 2021, so about 16 years. So I got licensed 13 years ago, and I started working because I was in the co-op program at my college. So we did work studies. And so I worked at KPMG, I worked at a small firm, and then I worked at a mom and pop firm. So then I went back to KPMG after I graduated. So I stayed with the big four.
Okay, awesome, awesome. And so then how long have you been out on your own?
So 2017 is when I started the Savvy Accountant firm. And again, it wasn't something that was planned. I didn't plan on having my own business. But after I left KPMG, I went to work in the industry, and I worked at TD Bank. And there was a merger that happened about 7 years after I started there. And my department was kind of swallowed up, I guess. And so I was laid off in 2017. And that's kind of what triggered the Savvy Accountant.
The savvy accountant. Okay, awesome. So I know that you said that you like to talk about tax strategy. So what type of strategies, I guess, but one of my bigger questions is, so what type of things did you see in 2020 when preparing 2020 returns that may have been different from prior year? Did you see anything?
I think the main thing that happened, obviously the virus hit, because under the Trump administration, there was a tax reform that happened. And so that changed a lot of the tax rules. And that was like the first main change that happened, well, since I've come into practice. So that brought about a lot of changes. And then the virus happened. And so that in a turn brought about a whole new set of issues that people weren't aware of. And so the biggest change that came with 2020 tax returns are obviously going to deal with the stimulus and people receiving the stimulus check and unemployment issues. I think those are kind of like the main things. Obviously, the relief that was provided. So we have the PPP, we have the EIDL, all of that deals with small business owners. So those are some of the main changes in the 2020 tax year.
Okay. Do you deal a lot with clients that have the PPP or the EIDL? Did you get involved in that?
No, so I don't get involved with the funding side. So I typically ear to the tax side and stay in that lane. So I definitely had clients that dealt with that, but unless we were working throughout the whole year and they were a retainer client, I don't do one-off accounting work. So I didn't get into the funding side.
Oh, okay. So you don't have clients that you just would take on like at the end of the year and do their QuickBooks cleanup or whatever, and then do the tax return?
So I don't typically do one-off accounting like special projects. So I have other like partners that I work with that deal with the accounting side. And so we focus on accounting and tax, but we focus basically holistically. So we look at the whole picture. So we kind of work with our clients throughout the whole year, and then we do the compliance and stuff based on that. We don't have any clients that just come solely for like one accounting piece.
Okay, interesting. Do you what software do you recommend that your clients be on software, like accounting software? Is there one particular one that you guys do use more often than the other?
So we definitely recommend that they work with a software. So if we're talking about accounting, QuickBooks is definitely one that most people know, but there are other competitors out there. So depending on what they do, what services they're offering, QuickBooks is going to be a solution. You're also going to have Xero, which is Xero. That's another cloud-based accounting software that I recommend. I think it's more user-friendly for people who aren't in the accounting space. So QuickBooks was basically created for accountants. And so I think it still focuses a lot on the debits and credits, and people might not be familiar with that. And so if you're not familiar with how QuickBooks works, it's always going to balance out. So if you do something incorrectly, it's going to find a way to balance it out because it's a balancing system. Whereas Xero is going to speak to you more in layman terms. It's going to ask prompting questions like, what did you pay? Who did you pay? And it does the accounting based on that sense. And so I find it's more user friendly for, non-accounting folks.
Non-accounting folks. Okay. Awesome. That's good to know because I've never used Xero before. I tend to go to QuickBooks Online. That's just what I've always used. So, and that goes back.
So that's a good option for people who are doing it on their own and like looking for a solution that, because like you said, you use QuickBooks, so you probably get a lot of cleanup where you see that they have unposted items, and because they thought that they were doing something correct, but they weren't doing something correct because it's unposted, and so you're gonna get that more with QuickBooks, I think.
Okay, awesome. So tax strategy. So we have a client that comes to you just to kind of know how your system works. So they come to you like the middle of the year. Hopefully they have something in place, right? A system. And so then they meet with you. So then kind of what goes into like a tax strategy session? What are some strategies that you have come across or have implemented or things that you see?
Yeah, so that's I'll break that down into some things that I can answer. So strategy is going to depend on the actual client situation. So they would come to us and we would first get on a discovery call to figure out what their situation is, what it looks like. Of course, if they don't have any books in place, we will set up the cleanup to happen so that we can actually look at their books and figure out where they stand. But when it comes to strategy, we typically take a 2 to 4 week period where after we have the initial discovery call, we're going to send them a questionnaire, and the questionnaire is going to collect different information from them to know where they stand, to know where we can actually be looking for strategies. And then from there is where we're going to determine which strategies we think are going to be best for them. The beginning process, we always start off by going back 3 years of their tax returns. So we're always going to start a review based on 3 years of tax returns. And we're going to always do a business entity structure analysis. And so what these two things are going to do is your 3 years, we choose 3 years because, as you know, you're able to do a file a claim of refund if you find any errors within 3 years. So that's why we start there. And we always do a business entity structure analysis to make sure that they're in the best business entity structure for their situation. So a lot of people get into business entity structures not knowing what they're doing, not knowing the tax implications, and they might not be in the best one. And so those are the two things that we look for no matter what strategy we're looking at, no matter whose plan we're working on, because those are going to be things that set the foundation. And then from there, once we figure out the best entity structure, we see any savings that they might have left on the table, then we go from there and figure out the best way we can find strategies and tax savings going forward. So then we do the forward looking, and that's going to strictly depend on their situation, what their goals are, what their business structure is, what all of that thing that's going to float into what we do for the forward looking.
Okay, that's interesting. And so every client is unique, right? Yep. I like to say everyone's tax return is not the same. Every client is unique.
Exactly. It's like
Oh,
a
wow.
fingerprint.
Right, right, right. So, you hear a lot of people, and I even say it myself, being a CPA, sometimes, looking like an LLC, the entity structure being like an LLC compared to an S Corp. So I'm sure you guys look at that, but then do you take it a step forward? Like I was talking to someone today and it's like, well, previously when entities were formed, you take into consideration the debt, the basis, the liabilities, all of those things, but a lot of companies now are just making money, right? So the goal is to just reduce their tax liability.
Yep.
So how would that different from if they don't have the 3 years of going back? So you're just doing that just for the retroactive to see if there's something that you missed, but just going forward, you would just kind of look at the forward looking.
Yeah, exactly. So that's basically like a bonus that we look at to see if they left anything on the table. So before they started working with us, if they've had 3 years of tax returns, there might be something that was missed. And so they can actually get that refund from the taxes that were actually filed. The forward looking is basically going to depend on their situation. It's going to depend on what the goals of the company are, where they are financially now, what their cash reserves look like, and then we're going to look at situations that we can actually reduce their tax liability for the future. But yeah, like you said, we actually do an analysis, and we don't only look at LLC and S Corp. We do a full entity structure analysis where we look at all the different business entity types, and we take their exact situation and show them the scenarios, what it looks like under each entity structure. And so that's how we are going to determine, because we're not lawyers, we don't act in the capacity of providing legal advice. We provide everything on a tax perspective. So everything that we discuss is going to be what your tax savings are going to be, what your tax requirements are going to be, what the compliance looks like. And that's how we structure our analysis.
Okay. Interesting. You have to elaborate more. It's like, so what's something that you can share with the listeners that they should be thinking about with this strategy? Because you have your questions that you ask. So like what does your questionnaire go into? What types of questions?
Yeah, so it's going to start off with the owners of the business, because each owner in the business is going to have an impact on the strategy that the business is going to employ. So we talk about the owners, we talk about the makeup of the owners. Are they married? Are they single? Do they have dependents? These things are all going to come into factors. We talk about insurance. We talk about things that they probably don't think about in terms of health, in terms of life, in terms of retirement accounts. We talk through all of those. So the questionnaire is going to be an involved questionnaire. It's not a one-pager. It's going to have many different sectors. And so we go through that with them, and we do that on a call. It takes about an hour for us to go through the questionnaire with them, because it's going to prompt us to asking other questions. A lot of small business owners, when the main thing they want to know is how they can pay themselves. So a lot of them are doing it wrong. Like they just want to be on payroll, and they don't understand that certain entity structures, you can't be on payroll. And so these are questions that we prompt and get them to ask, so that we, first of all, we can see, are they compliant? And second of all, we can let them know that there are other options out there. And a lot of business owners don't understand the difference with different income sources. So they don't understand what a distribution is versus a draw from the company. And so we just explain these things and let them know that the different entity structures are going to lead to these different conversations.
Yeah, very good, very good. Yeah, oh my goodness. So if someone has, oh gosh, do you have, a lot of times in California, because you're in Florida, so Florida, like for an S Corp, is there a separate tax for an S Corp in Florida?
A separate, like a tax return?
A tax return, and then like in California, we have an $800 minimum tax for an S Corp. Do you have something like that?
Yeah, so the state filings, you mean? It's not $800. I think California is probably the only one that's $800 that I've worked with. I know even New York is not that high. So I think California is probably That's one of
Right.
the,
So like when you file to become a corporation, you have to pay the $100, but then every year there's a
you have
minimum
to,
tax
yeah,
that you have to pay. Yeah.
yeah. And that's like, there's probably other states that have that, but I know California is the notorious one. And
Hmm.
that's another reason a lot of people, they hear that you should be an LLC when you can
Hmm.
operate as a sole proprietor, and a sole proprietor is a legitimate business entity structure. A lot of
Hmm.
people like forget about.
Hmm.
But in the state of California, that's definitely something that you want to consider, depending
Hmm.
on what industry you're in and what insurance you need to carry. A sole proprietor might be the best route for you because of
Hmm.
that $800.
Because of the $800, right?
These are things that people need to think through.
Hmm.
Yeah, so the liability protection is definitely there with the LLC, but depending on what industry you're in, you might not need that separation of self from the
So
business.
that's true. Um, do for I had someone ask me recently about they wanted to move, of course, to avoid the $800. So they're like, well, what if I just move to like Florida or Texas or something like that? So does your state still have, because like California, they're going to tax you for everything. If you're here, they're going to
Exactly.
tax you.
And people always miss this. And literally I just had this in a group that I'm in saying, well, I set up my business in Delaware, but I'm located and they happen to be in Pennsylvania.
Mhm.
But I'm like, yeah, but you set up your business in Delaware. That's something that large corporations do, but you have to realize that they are actually setting up in the state that they're actually operating in. So you're going to
Right.
be required to form your LLC as a foreign entity in the state that you're actually doing business. And
Mhm.
so for you as a small business owner, you just made yourself be compliant to two states now, because
Mhm.
you're going to have one set up there and one set up in the state that you're actually doing business. A lot of people miss that, or they just hear about the big corporations. And I'm like, these
Mhm.
big corporations can have an LLC set up in every single state
Right.
because they can afford to do that. So you have to just basically be aware of what you're doing. So you can
Mhm.
set up your entity in another state, but you're just opening yourself to now have compliance for two states, because you're going to have to be compliant in the state that you're residing in, where you're
Right.
actually doing business.
Right. Right. That's what I said. It's like it's too much. For
Yeah.
me, it's like, why do I want to
Why do you
add
want to
extra
do
things
that?
to think about,
Yeah, exactly.
It's like make it simple, make it simple. Okay, so I like that. So there's no like one simple tax strategy. It's a matter of sitting down. Like I say,
Ex-
you have to have a conversation, right?
exactly.
It's not a one size fits all.
I think, and that's what people they misconstrue, like especially in social media, they hear things and then they think they can just apply it.
Mhm.
Like there's, the hiring your children, that's a big one that's out there. Hire your children, pay them, and it's like tax free. Yeah,
Mhm.
that's it's a legitimate tax strategy, but you have to know how to employ it. You have to basically make sure you're doing it correctly,
Correctly.
and
Mhm.
it has to be something that your kids can do in the business and you can legitimately pay them. That
Right.
$12,000, it's not a haphazard number. It's basically the number of the standard deduction. So it's saying that you're still going to pay them. They're still going to file a tax return.
Mhm.
It's just that they won't have taxes due. So some people think that they pay their child and then there's nothing else to do. No, you now have compliance to figure out for that
Right.
child.
Mhm.
So so that's another aspect that they just think is easy to implement, but it's not as easy as just paying your child $10,000 and thinking that's it. You now have to file a tax return for it to claim that money for them. They just won't
Mhm.
have a tax liability associated with it.
Mhm. Okay. Cool. I like that because I find a lot of times, like you said, on social media, people are saying different things, and it's like, okay, well, that's true, but
But
or even like with, hey, get a G wagon, write it off on your business. Like, yeah, you could probably do that, but do you have the income to support the G wagon? Do you
thank
have
you.
can you make the payment? It's like, how do you know? It's like you have to get the foundations. You can't skip that part and just try to get to the tax strategies or try to, eliminate the tax liabilities. You have to
I
get to the
know.
foundation. Like you said, you guys start with, a review of their accounting system,
Yeah.
right? To know what it is that they're working with. So that's huge.
And it's so funny because I feel like people need to understand the tax laws and what they were written for. So yeah, do you have this 6,000 pound vehicle that you can write off? That was typically like written into the tax law for people who require that vehicle. So you buying this G Wagon because I have no idea. I don't know, you like make widgets or something, or you like or you sell paintings, like digital paintings. What
Mhm.
would be the business need for you to have that vehicle? Like everything you do is digital, so you're never driving or delivering things to clients. So it's like
Right.
not everything fits for your situation.
That's good. That's a bar right there. Not everything fits for your situation.
Exactly.
Yeah. Because I had someone ask me that question too, and I was like, well, would you use it in your business? It's like a business expense or business deduction should be something that you would use in your business,
Exactly.
necessary and ordinary, right? You know,
Ordinary and necessary. I keep trying to tell people, like, just remember that phrase, and it should eliminate a lot of hardships with you questioning, oh, is this, if you can answer the question, is it ordinary, necessary for your business? Is somebody in the same business as you, is this going to be something that they're considering as a deduction for their business?
right.
If the answer is yes, then you most likely have a valid deduction. If it's no, and you're trying to figure out how to make it a yes, you
Yeah.
probably don't have a valid deduction.
Yeah. And there is that gray area, where some things, will fall in there, but it's like you don't want it to be,
You don't want
so
to be too
gray.
many gray. Exactly. Like you don't want 50 shades of gray here.
Right.
Like you can have one thing that you have to explain, and that's the thing with working with a professional. If it comes to you having to, be brought before the IRS to defend something, you want a professional who's going to know your situation and understand your business and
Right.
be able to explain it. I have this case that told me about, and this person had gotten brought to the IRS because one of their deductions was denied, and it was for a yacht.
Oh,
And
wow.
so she had three different attorneys trying to represent her, and it didn't work. So she got her final, like the IRS told her, like you have your final 30 days. And so she went to my mentor, and it was essentially, she was a realtor that only showed beachfront properties.
Mm,
And so the yacht was basically, she lets her clients get on this yacht so that they get the feel of what it's like to be on the beachfront property.
right.
They were able to get the deduction reversed. They got it denied, they got it reversed because it literally fit into her story. That's
Mhm.
the only type of property she sells. This was literally a legit business deduction
Right.
because that's what she uses. You just had to have the story that went with that. So that was an example of a gray area, but it fit for her business. And
Mhm.
so it was valid.
Right.
So
Right.
people just need to understand that it can be gray, but you don't
Mhm.
want to have 50 different items that you're trying to explain.
Explain. Right. Yep. You have to justify your whole tax return, right? It should speak
Exactly.
speak speak on its own, right? It should
Exactly.
substantiate itself. So yeah, that's very good. So let's talk about the personal management, personal finance part of. Do you do that in your business, or is that just another passion that you have?
Yeah, so that's definitely another passion. And so I kind of like, I don't do it in the business per se, but I do have a podcast that I launched, and I talk about personal finance issues. And so I created like an e-store that has like digital downloads, and they deal mainly with the personal finance side. So it's going to deal with how to tackle budgeting. It's going to deal with savings and stuff on the personal finance side, because that's more of a passion that I come from, where I want my community to understand that they can build wealth and it's not something that's out of our reach.
Right.
And
Okay.
so it's more of a
Okay.
passion side project.
Do you have something similar for small businesses? So do you get into the accounting part of it, or do you just focus on the tax side?
So we have we offer full service accounting and tax, but the way we structure our packages is, if you're going to be with us for the accounting piece, it's going to be for the whole picture. So we work holistically, and so all of our accounting clients are our tax clients as
Or tax
well,
clients as well?
but it doesn't have to go the other way. So in order for you to be a tax client, for you to do tax strategy, you don't have to be an accounting client. So
Mm,
if that makes sense.
okay.
So when it comes to taxes, we want to make sure we do the whole picture. And so that's how we operate. Um, so I do have some courses for small business owners. So I have courses that deal with DIY tax prep. So I walk you through, as a small
Oh,
business owner,
mhm.
if you're filing a Schedule C, I walk you through what that looks like. And so
Mm,
that's a course that's available. And that's mainly a course for people who typically DIY, and adding a small business is new to them. So they typically have an easy tax return, and so they've always done it themselves. But now with the coronavirus, they started a new business, and so now they want help on figuring out how do they now file with this new business. Everything else is kind of the same, and they can handle it. And so I have a DIY tax prep course, and I also have a course on what we were talking about at the beginning with entity structures. So I have a course on business entity structures, and it's called The Savvy Way to Choose. And I go through the three main parts that you need to consider. So because I come from a tax perspective, I'm going to talk through what the different tax implications are of each entity structure, how you pay yourself. I say that in air quotes for each entity structure, and what the compliance requirements are from the tax perspective for each entity structure. And so that's another course that I have for small business owners.
Interesting. Okay.
Yeah.
I actually have something similar, but yeah, great minds think
Awesome.
alike.
Exactly, right? And that's like the number one question, probably for you too, that you get asked. Like I find that's like one of the number one questions. What entity structure should I be?
What infrastructure? Right, right.
It's not that simple. Like we need to take a step back and figure out what the goals are, like how many people are in the plans of owning this. So
Right, right. And I think a lot of times people go LLC, and it's like, yes, an LLC is a great way to start, but if you're a single member LLC, what's the point?
what's the
You know,
difference?
and especially like in California, because you have to pay $800 per year,
Exactly.
right?
And so that's a perfect example. It's a great example of saying where people like skip over sole proprietor so many times, when if you're going to be a single member LLC, you're taxed the same way as a sole proprietor. So
Right.
you want to consider all of your options.
All of your options. Okay. Do you have a particular industry that you work with, or is it any type of client?
Yeah, so I work with the real estate industry a lot, and that's kind of my niche when it comes to the accounting side. That just happens to be where we focus. So we focus with the real estate. So we work with a lot of investors and a lot of agents. But because we focus on tax resolution as well, so we help them with their tax debt. If they're dealing with tax debt, we don't really have a niche for that, because the service is more of the niche. It's dealing with non-filers and helping you figure out your tax debt. And so we try to get a handle on that. And so that's for individuals and small business owners, but there's no real niche there. But I can tell you that with the whole coronavirus, I've been thrown into a whole new set of clients. So traders. So I've not by accident, but I've now focused on traders. So I actually have a course on like an introduction traders, on just things that they need to be aware of when it comes to trading.
That's interesting. I have a course on that too. So
Do you? You see, this is so funny.
we're like on the same wavelength. It's a matter of
wavelength.
getting the information out there so that people have it available.
Exactly.
Right.
Exactly.
Right. I saw that during the pandemic. It's like I saw so many people that were like, hey, I bought this course and I made so much money, on trading options. I'm like, okay, well, you just spent $100,000 trading options. Your tax return is going to be a lot different this year than it was last year. You need to talk to someone. Yeah. But traders is a good niche. It's a good niche because a lot of people are doing it. And to be able to make the election or be classified as a trader and have it as a business, that's where the advantage is. And a lot of them don't think about that. So
that's very true. And so I definitely had that ramp up this year. And so that brought about the course, because a lot of them weren't educated on what it means to trade. A lot of them had this notion that as long as I keep my funds in the account, I'm not taxed. And I'm like, but the triggering event is the selling or the buying. I'm like, that's what is what it's not if you spent the cash after you did that.
Right.
So,
do you do anything with crypto?
No. So crypto is where I draw the line. I'm just to be honest, there was enough information with the trading, with the coronavirus, with all of the new stuff, that I was like, my capacity to take on something new is not there. And so
Mhm.
crypto is not where
Mhm.
I'm at. That's not
Yeah.
my
I haven't gotten into crypto either. It is just something, I don't know.
about it.
Or
Yeah,
Forex, it's like I don't do
yeah,
Forex. I don't know anything about that one, and I don't really want to learn it right now. So,
exactly. Like,
mhm.
people realize that as CPAs, we still have learning. Like, I still learn for 100 hours a year, and so
Right.
I still have to have that capacity to learn and to take courses and to understand this in order
Mhm.
to educate you on it. And so crypto was just one of the ones that, unfortunately, I was like, yeah, that's not going to happen.
It's not
So
gonna happen. Yeah.
that and cannabis.
Oh,
So
yeah.
those are two big ones they're growing, but I was like, I don't have the capacity for this right now.
Yeah. And cannabis has so many nuances because,
It's
it's
not
legal but
federal.
not
Yeah,
legal, right?
exactly.
So it's
So
like,
until the federal can get on board, it's so state specific, and
mhm,
so it's going to be so, like, you have to be. It's very nuanced. And
mhm,
again, I was like, I don't have the capacity for that right now.
right, right. So do you have a lot of clients that are traders, and have they elected to be taxed as a
Yep.
trader?
Yep.
Okay.
So I have, and yeah, I have and it just worked out that I spoke in a traders event, and so I got a lot of clients that way, and so we definitely do talk through the MTM election, and we talk through that, and so yep, I definitely they gave it to me as my second niche without me electing it. So
That's awesome. Yeah, there's so many people out there that are trading, so many different groups that have come up,
yeah,
just teaching people how to trade. And I think it's great because,
yeah,
we need all the information that we can get in order to be, to level the playing field, right? Some
exactly.
people have been trading for years,
For
and here it is,
years,
we're just
and they
getting to it.
understand it. Yep.
Hmm. Hmm. So
And
yeah.
yeah, so
So with the tax resolution, did you find a lot of clients that have not filed, so multiple years returns, and kind of
yep.
like, what's your
So
approach?
yep. So in essentially when I got into the tax resolution side, I realized that a lot of the people were coming to me, and the main issue was compliance. So they just weren't compliant in their filing, and so it's happened that that's become kind of my niche service in that sphere. It's They're dealing with high tax debt, and they're getting these notices, and then they just kind of shut down because stress, the IRS, it scares people. So they have an outstanding debt, and then they haven't filed. So we created a whole program to deal with tax resolution, and we call it the dream method. And
Mhm,
so we basically work with them, and it's for a period of minimum of 90 days. And throughout the 90 days, we basically take them through our program. And so it's going to start with the discovery, then we're going to do our research, and then once we do our research phase and we figure out what the issue is, then we're going to amend, we're going to find an answer, and then we're going to take them to the maintenance phase. And the maintenance phase is where we basically work with them for ongoing for the future. Because as you know, with resolution, any resolution that we come up with the IRS, they have to stay in compliant for 5 years.
mhm.
Otherwise, everything gets overturned. And so we work with them to make sure that they stay compliant for those years so that everything that we worked on to get them into the good standings doesn't get lost.
Doesn't get lost.
Yeah.
Okay, awesome. And you have a lot of clients that are doing that.
Yeah.
Yeah, I had a
And
lot of, yeah.
yeah, and I actually recently just did a full 2-day training.
Hmm,
The numbers are, I think there's like 1.3 million people who the IRS thinks haven't filed tax returns. So, and because everything was on hold with the virus, they haven't been issuing levies, and they haven't been issuing levies, and
mhm.
everything has been on hold. I think once everything opens back up and the freeze is kind of lifted, I think there's going to be a lot more potential for that, because a lot more people they're basically kind of in limbo right now, where
Right.
they're not getting the notices, but that doesn't
Mhm.
mean that things aren't happening
Aren't
behind the
happening.
scenes.
Right, right. That's a good point. I know I had several clients that came to me during tax season with multiple years returns. We're talking 17, 18, 19, 20. And
Yeah.
I'm like, okay, so for the summer, we're doing it. If you haven't filed an 18, 19, or 20 return, it has to be done by,
Yep.
November 30th, because we're not doing it next tax season.
Yeah, exactly. No, and that's a great point. So I think people need to realize that the IRS doesn't go away,
Right.
and they can actually file a return on your behalf if you don't file. So
If you
a
don't
lot of
file.
people think that they just kind of fall under the radar.
Mhm.
And when they get a notice, they're like, I don't know how I owe this money. And well, the IRS basically prepared your tax return for you.
Right.
And when they do that for you, they don't put everything that you're entitled to. They're just going to give you the standard and
Mhm.
keep pushing so that they can get what you owe them. And then now you have penalties and interest. So now we got to take care of that.
Right.
So it's not something that you can ignore. You definitely want to
Mhm.
make sure you stay on top of it.
Right.
And I understand that it gives you anxiety. And so that's why you need to work with somebody who can help you, because you're not gonna do anything that's giving you anxiety. You're gonna always push it off and push it
Mhm.
off. And so it's better to work with somebody.
And it's better to respond to the IRS because they're
Exactly.
not going to, they give you opportunities and they're very, I'm going to say they're very lenient, but they're lenient. They're willing to work with you. There may be some parameters, but it's better to reach out and talk to them than just to get
Exactly.
a notice and ignore it. Right.
Exactly. And like the taxpayers, they have they have protection, and they have like rules that are supposed to be enforced to help protect them. And so
Right.
they need to be aware of these things.
Right.
Like you have appeals that you can do, and these
Right.
are rights that you have as taxpayers. But if you ignore things, you're kind of giving up your right to a lot of these things.
That's very true. Very true. Very true. Very true. Okay. Awesome. So is there anything else, because I want to be respectful of your time, anything, any passion that's burning on the inside that you want to make sure that the listeners get from you?
Yeah, so my biggest thing is that I want to save my community $1 billion in tax savings. I want them to be able to build generational wealth by understanding the tax code. And I want to use, because I think my gifts are that were given to me were understanding the tax code and being able to explain it in a way that's easy for people to understand. And so I want to use that to help them build generational wealth. And so I just want them to understand that the tax code was written in order for us to understand how to reduce our tax liability. And I think that people that look like me don't necessarily understand that there's stuff written in the tax code that can benefit them. Like it's not all going to benefit somebody who doesn't look like us. And
Right.
so that's my
Right.
main goal.
Right. And that's so key. And that's the reason for the podcast. It's like I want to share the information, I want to
Yeah,
get it out there so that we can have the same advantage, so that we can level the playing field, right?
exactly.
In all areas, we can level the playing field. Like I said before, it's we're a culture. We work hard,
Yeah,
we're going to work hard. We're going to overcome any challenges that we have. We are persistent, we are resilient, but we have to get the information in order to be able to
exactly.
use that to our advantage. So
I
yes,
agree. So I
very
think
cool.
that's what it is. I think we just need the information because, it wasn't readily available to us for so long.
Mhm.
But, now that we are starting to know, I think this generation is going to be the generation that sets us forward exponentially.
Yes, yes. And the generational wealth is huge. That's another big
Yeah,
thing that I'm for, is helping, to educate people on how to accomplish that. We say we
yeah,
want to have generational wealth and we want to leave it for the next generation. How do we do that? And
exactly.
that's probably something that comes through with tax strategies as well, right? Because you did
Yes.
say that you mentioned that you go over that in your discovery,
Yeah, we definitely want to make sure that they understand that they can pass wealth down. And especially with the industry that I work with real estate, it takes a lot of education because we're finally getting into real estate a lot more now.
Mhm.
But so many times I see things like little mistakes happening where there's a home in the family and they buy it from somebody in the family for $1 because they think that's the best thing to do. And I'm like, well, no, because that's going to trigger a taxable event. You buying it from them is triggering a taxable event. Whereas if you inherited the property when they passed away, that's how you build generational wealth, because now you have that step up basis that's included that you get the benefit of. So just little things like that that we just didn't know, you know, like we're learning, but there's still little pieces that we don't know about.
That we don't know.
So
Yes. I was talking to someone about that the other day, about them having a home in their family that they're wanting to pass it down from generation to generation. And we talked about a trust, you know, putting it in a trust and setting up the trust so that it will make, you know, hold the property, and then it'll pass down the income, you know, to the next generation. Yeah.
And so estate planning is definitely huge, and understanding how to do that. And so many people in our community don't think that they need an estate plan because they don't have anything of value, but they don't realize that everything can go into an estate plan. Your accounts can go into an estate plan, and figuring out what's going to happen with that. And so we just need to understand that we have things of value. And
I like it. Do you do estate planning also?
I do not. I work with attorneys that do it, but I don't do anything with estate planning.
That's a passion that I have as well. I've worked in the compliance side of it. So, you know, the 706s, the 1041s, you know, those type of returns. And I'm involved in a couple organizations that deal with estate planning. But I want to get into that more, because it is getting that information that we can pass down to the next generation, or help us to pass down to the next generation. So yeah.
I agree. I think that's great. So now I have a new name that I can pass on for that.
Awesome. Awesome. Well, thank you so much, Atiya. Okay. Atiya, thank you so much for being with me today. I appreciate it. Your knowledge is just vast. So many things. We could just every time I talk to someone, it's like we could just go on and on and on and on and on. It's like but we have to be respectful of your time, and then as well as the listener's capacity. You know, it's like you don't want to just kind of overwhelm people, but there's always opportunities for us to circle back, talk about different things. You know, maybe there's some collaboration, you know.
I'm definitely here for it. So let me know. Thank you for having me.
I appreciate it so much. So Atiya Brown, the Savvy Accountant, you can find her at the Savvy Accountant on Instagram, and her website is www.thesavvyaccountant.co. And I will include all of that information in the links below on the podcast, where you can find it on Spotify, Anchor, and then possibly on the YouTube channel as well. All right.
Thank you.
Thank you so much.
Okay, bye.